Well, welcome back to the Investor Shed podcast. Thank you for being here. It's going to be such a pleasure today, isn't it, Jeremy?
So much pleasure today.
Yeah. I'm Nick Beveridge. This is Jeremy Kitchen, in case you guys don't know that by now.
Greetings and salutations.
We just ordered some smelling salts for our next episode.
If it's here by Monday, which it's probably not going to be here by Monday.
No, I did the tomorrow. Get it tomorrow.
I didn't. It just said ground shipping.
We didn't use Amazon. We used some other.
We bought it straight from the source. Are you excited about that?
I am.
Okay. Good.
Are you? You're nervous. Apparently there's health issues associated with these things, but it's mostly people hitting their heads.
It's fine.
People hitting their heads after they smell it.
Right.
Is the big concern.
I think I'm fine with it. I just don't want to fight you in here. We're in a very small office to be confined and have mega adrenaline.
Well, hey, let's get our pre-workout on and then
let's microdose our pre-workout. We'll talk about it later. Why do people take advice from us?
Oh, because we got money.
Nah.
More money than most people in North Idaho.
Yeah. I don't think
I don't know. I don't think anybody would listen to us otherwise. Yeah. Well, hey, today we're going to do something fun today. I'd like to talk about, since it's early in the year when we're recording this, it's still, we're in January. And by the way, we have a live show for those that don't know. If you ever want to catch this a little bit earlier, we do this on X and we do this on Facebook. So if you guys want to follow us there and listen to our live shows, you can do that.
Yeah.
Or if you just want to hear them as they come up, they're usually a month and a half or so delayed.
The live ones, you get what you get here and you don't throw a fit, so we don't cut anything out. We don't cut any filler out. You just get the show as it's.
You get all the ums. We took some advice from some listeners, and I'm gonna make these slightly shorter in the post editing because AI will take out all the pauses and ums.
Yeah.
And some of our listeners told me that they would kind of appreciate that. So I'm gonna hit those buttons on the AI editing. So when you hear the final edited version, there's going to be, not all the ums are taken out, but a good amount of them.
Yeah, we're going to sound like chipmunks, just very fast, very fluid, no stopping, no taking breaths. It's just going to be information galore.
Yeah. And if you guys actually end up hating that, just let us know and we'll revert back to our long, weird pauses.
I think it can go both ways, right? Like there's the people who see us do genuine conversations, and then there's people who just want to hear the information. So it's like,
yeah,
you cater to everybody.
I don't know. I like taking people's advice though.
Yeah.
Because it's, if it says easy to fix as a click of a button, why not?
Right. A lot of things in AI are pretty easily fixed. Speaking of fixed, you can fix your BO problems.
Wow.
Right on the podcast.
My problems?
You can fix your BO problems.
Well, are we talking about our sponsor today?
Our podcast sponsor.
Yes.
I don't know. That sounded like a good segue. Penny B's handmade, handcrafted soaps. We talked about them before. Blake and Jessica Thompson, they used these for their daughter, and they started making these soaps for their daughter as a natural way to have nice, clean soap for their family. They made with natural honey, so they have their own honey farms. They're made with really, really nice oils.
Yeah, they have their own bees.
They have their own bees, and they smell
they make
really
their own
good. Just the packaging on these just looks really good as well. I've said it before, if you're a realtor, these should be going in your closing baskets.
Yeah.
Like these just make such good gifts.
That's a classic basket gift.
This is a very classic basket gift.
Yes. The most natural soap you'll ever see in your life.
Yeah. Website is pennybees.com, and you can enter the code SHED, SHED, to save 10% off your entire order, active indefinitely.
Who doesn't want to save 10%?
Who doesn't want to save 10%? I love saving 10%.
Yep.
Beautiful soaps. They smell great. They've got a smorgasbord of different scents that you can try out. And give them a try. Your body will thank you. Your wife will thank you as well.
All right. So, Jeremy, let's get into this.
Let's do it.
Let's make predictions about what's going to happen this year, because we can always go back, and you guys know this too in the media world. We can look at an episode from a year ago and be like, how did that turn out? This year, we're going to put it on the line and we're going to make some bold predictions on what we feel like things are going to happen in the economy this year with interest rates in our personal businesses. And we'll just see and we'll see how it goes.
Yeah.
Because we can check back in and see how wrong we might have been.
Yeah. This all goes on the internet, so everything you say will be used against you in a court of law, of course. So
yeah. Now I like to make predictions on a regular basis when it comes to fix and flips and seeing what things will sell.
Yeah.
I flipped a stock option this morning.
You did.
I made a 600% return, thanks because I made a pretty smart prediction yesterday.
Yeah. Did you make a prediction, or did you just time it when it was right? Like, there's a difference between...
It's a prediction.
Okay.
So this option that I executed yesterday, I have about 15, 16 different stocks that I own and I watch on a regular basis.
Sure.
And they're pretty volatile, mostly tech stocks, about a third of them. And I just like to see them on a regular basis and notice patterns. Sure. And I noticed this one oddball yesterday where most of the market was down a little bit. This one was up like over 6%. And in my eyes, anything that spikes over 5% is kind of a spike. And the ones that I've been watching, if there's no actual news associated with the spike, if it's just simply it's just spiking because, and there's no actual published data on some merger or something interesting that happened, but in my experience what's very likely to happen is within the next day, maybe two, it'll come right back down. So I noticed this one stock, I paid an option, which is and it's a put option. So you can do two different things. You can bet that the stock is going to go up, or you can bet that the stock is going to go down. Even though the stock was up, I bet that it was going to go down, and I put some money on the line that I could potentially lose with the expiration of executing this option today.
Got it.
So I just bought it yesterday afternoon before the market closed, because you can only buy options within the market hours.
Right.
But you can buy stocks like 24/7.
Not all of them.
Not all of them, but a lot of them.
A lot of them say like, hey, by the way, you need to, you can either buy wholesale shares or you can queue a fractional order.
Right. Yeah. Yep. But a lot of stocks you can buy 24/7.
Cool.
So I decided, hey, I'm gonna bet that this stock is gonna go down, and you bet there's so many different markets of like what price. Right. And so I think it was trading around $342, spiked yesterday, and I bet. I wanted to pay for the option. I paid $3.30 a share. But when you buy an option contract, you're buying a control of 100 shares. So I'm betting a premium of about $3 a share. So it cost me about $330 to buy just one contract, and it expired. That option expired at the end of the day today. Right. So within 24 hours. Which is a very risky move.
It is.
But I bet that it was only going to go down. Well, I wanted the option to purchase it at $340. And you can select from a huge spreadsheet of different prices. Okay. But I bet that it was just going to go down a little bit. But it gives me the option today to purchase it at market price and then sell it. And when you're actually putting the option to sell it at a certain price. So I was basically yesterday betting. I want the option to buy it at this lower price sell it at this lower price. I want the option to sell it at this lower price while buying it before the expiration date at whatever the market price is. So the further the stock goes down in price, not the option, but the further then the more valuable that put option is worth. Because you can buy it, let's say, and the stock I think went all the way down to like $310 today. Okay, it went down a lot. Yeah, it went down it went down further than it went up yesterday.
Usually that's what happens when a correction happens.
Not always,
but then
but sometimes it's a further correction.
And then some correction. Yeah.
So I just got lucky. I kind of had a really strong feeling. Obviously, you don't really bet $300 on something that you're confident you're going to lose. I was confident that based off patterns, and I was making a prediction, this thing's going to go down because there's no reason for it to go up as much as it did yesterday. So I had a feeling that a lot of people that own that stock were going to sell.
Sure.
And you're going to have more sellers tomorrow than you will have buyers.
Sure.
And that's all that happened. You just have more people selling than more people buying, and that's why the stock went down. And in the morning, that $300 investment was worth the 1 minute into the market, because I saw that it was trading overnight, and overnight it went down 4%.
Okay.
Which, that actually makes a huge difference.
Sure.
And then the morning, within 2 minutes, it was down 6%.
Okay.
And I could have just held on. I have until the end of the day to execute the option or sell the option. And so I wasn't executing the option. I was selling the option at its market price.
Got it.
And I made I put in $330 something, and I think I took out $2,400. So I made over $2,000 profit.
Nice. Congratulations.
Which doesn't happen often.
No, it does not.
But I made a prediction based off patterns that I've recognized in the past, not simply by just guessing or just betting.
Yeah.
It was strictly based off patterns that I've noticed. And that's, I think, what's this episode's going to be surrounded by. It's not just, we're just not making wild stabs in the dark here of what we're predicting is going to happen this year in the market.
Right.
But it's based off patterns.
Sure.
You know what I mean?
Yeah, I hear you. Congratulations on your win. Are you going to do any more option trading?
probably.
Mr. I said I'm never going to do it again.
So here's what I did wrong in the summer. I got way too into it, and I was making too much money, and my ego got ahead of me.
Yeah.
And I allocated 10% of my whole portfolio towards option trades. Now I'm only allocating like 1%. So I'm keeping it at a much more conservative level and just doing smaller. If I lose this, it's not going to ruin my day.
Yeah.
Kind of trades. So that's the difference these days. So I was going way too much. When I first started option trading, I wanted to allocate a maximum of 5%.
Got it. Okay.
And then it just got to my head, and I just was doing way too much.
You think you're doing too good, and then it all comes crashing down.
Yeah, because you're still risky. You're making predictions, and if you're wrong, you are wrong in a big way.
Right. If
you're wrong in a stock trade, like the swing trades that I normally do, it's not a big deal because it's not like I'll just sit on the stock until it goes back up again.
Right.
It just means I have less capital, but I don't have to take a loss. I could just sit on the stock if I'm wrong.
Yeah, it's true.
But with options, it's not that way. It expires. So your investment can go to zero pretty quick or close to zero if you don't execute it.
And you do big swings, big rewards, obviously, for that. It's high risk, high reward, right? Me, like I'm more of like a buy and hold stock. I just buy the thing and just kind of sit on it and wait for time to do its thing. And then obviously looking at my portfolio, that goes up too, but I'm not making 600 to 700% returns. I'm making, 8 to 12.
Yeah. But this isn't a life-changing investment.
Right.
I have risked $300 and it's a huge return. It's not normal. But it did not change my life this morning. It made me feel good.
How much time do you think that took you to like research the stock, do the options, watch the market? Like you have to actually like be active.
Yeah. That's a good point. In the past, getting to the point now, it's more the experience kind of built on the less time that I have to spend on it.
Right.
I probably spent less than 4 minutes on that.
That's a good rate of return.
All in.
Yeah.
And that's that was deciding to purchase it, the action of doing it, and then watching it this morning and selling it. Probably total combined 4 minutes. When I was doing this earlier in 2025, it would consume half my day trying to research and see what the heck am I doing and how does this work?
How do I min-max it? Right. Like,
and I'm not saying that I'm good at this yet or anything, but it's just fun.
Yeah.
Because it still feels like gambling, but with a little bit more control and just it feels just a little bit like better odds.
Sure.
But still not a good habit to get into with a big portion of your portfolio.
Yeah. Try not to let that ego get back to your head.
Yeah. Trying. So let's first talk about the real estate market and what we think. So is this going to be the year, Jeremy, we'll start with you, 2026, where buyers ferociously get back into the market and start buying houses?
No.
Okay, why is that?
I don't think anything's like, first of all, wages, like people aren't making enough money to get back into the housing market, I think. The average American is still having trouble getting approved for mortgages, right?
Yeah.
Like houses are just far too expensive and incomes are just far too little in order to make something like this make sense.
Even if rates go down.
Rates are going to have to go down more than you think.
And gas prices are down a lot.
I mean, gas prices, like people complain about that, but like at the end of the day, that's like a very minute thing.
Okay.
Like if gas is $2.50
for you,
for a lot of people,
you don't drive a truck or an SUV around.
That's true, but also I made that choice financially, thinking like, okay, I don't need a truck or SUV.
He drives a Prius, by the way. Gas prices are less important to Jeremy. And less important to me too. I drive a Tesla.
Right. But like on an average person, I mean, like if gas prices go from like $2.50 to $2.75 a gallon, right? Like, I mean, it's not a huge difference, but over, 16 gallons, that's like $5 or $6. It's not a make or break.
Well, but the difference is, I mean, gas prices in the last year have gone from, where were they a year ago? Like $3.50 or something, and it's less than $1, or it's more than $1 cheaper these days?
Yeah, I don't know. I don't remember where gas prices was. Again, like this is something that like I have no control over, so I don't typically research and try to get mad about gas prices just because it just, at the end of the day, you pay the gas or you don't. You know what I mean?
Yeah. I'm going to actually research it.
Yeah.
Okay, a year ago today, gas in this market was about $1 more.
Okay.
It was about $3.10.
Sure.
And right now I'm seeing right here at the Maverick, right next to our neighborhood, $2.15 a gallon.
And this is
cheaper than I've seen in a long time.
You're putting this in for January 2025 and January 2026. Historically, gas prices are lower during this time.
Sure. That's why I'm comparing.
Right. And that's why
I'm not comparing the summer.
Right. But like, that's what I'm saying. Like, it doesn't really negate
trying
anything.
To compare apples to apples here.
It doesn't really negate anything because gas prices are going to go back up in the summer when tourists comes back up and people start traveling again. Gas, it's supply and demand on this stuff.
But for the people that are just barely getting by, that have, families or whatever, driving trucks for a living or an SUV, if they're used to putting $600 of gas in their car, and now they're putting $400.
Yeah,
it's a couple $100 that they're saving a month.
Sure.
I think that's a pretty significant savings.
It's pretty significant, but then you have to think about what people are actually doing with that savings.
Yeah.
You know what I mean? Like, are they buying?
Oh, who knows?
Like,
everybody's spending habits totally different.
Right.
And I totally agree with you that most people will just blow it on something else.
Right. If you have the money in your account, and we're guilty of this too. If the money's sitting in our account without a job, we give it a job.
Yeah.
Yeah, and that's why interest rates, I think, are going to have to really significantly get back into the 3s and 4s for people to start really ramping back up. But if that happens, interest rates go back down, I think house prices are going to go back up because it's going to create more supply and demand, right? It's going to make more buyers want to get back in the market, which makes your property worth more money when you go to sell it.
Got it.
That's my prediction anyway. As far as this year, people getting back in the housing market, of course, people are still going to be making deals. I just don't think we're going to see like a huge boom like we saw in the COVID years.
Okay. So if you had to guess, in our region, do you think the amount of sales are going to go up or down by the end of the year as compared to last year?
If I think they're going to go up or down, I think they're going to go down a little bit.
Okay. And about how much, if you had to guess?
Not much. Like, I really think it's going to be pretty stagnant on what I saw last year to this year, but I would say down. And this is me not making a bold prediction. This is me just thinking like,
well, we're making bold predictions.
Yeah, we're going, well, if I'm going bold, I'm saying like, yeah, this is going to go increase by 20%. It's going to go down like 5%. It feels like it's just kind of like 5% as usual. Yeah.
Okay. So that's pretty significant.
Yeah.
Okay, so
3 to 5%. How about that?
Yeah. So Jeremy predicts that the amount of sales that we're going to see in our region by the end of the year, down by about 5%. That's a pretty bold statement, I would say.
Okay, cool. I'm for it then.
Yeah.
I haven't seen anything stating otherwise. I know people are like, oh, interest rates went below 6. I'm like, weren't they like 6.1? And people are freaking out that they're like 6.1, 6.0 right now. Like, it doesn't seem like a lot to me.
Sure.
So
okay.
And again, I haven't seen any legislation or anything that's going to fix any of this. And I think people are going to continue making, like, the people that want to buy houses are going to continue buying houses. And they're people who are just fine living their lives.
Yeah.
I don't see a huge change, at least in this market.
Okay.
What about you?
I think a little bit differently.
Okay.
I don't think we're going to see a huge change, but I think we are going to see more activity than we did in 2025. And the reason for that is Trump has he has the right to dictate what Freddie and Fannie do with their funds that they have on their balance sheet. And they have $200 billion and he's dictating them now. He just announced, a couple weeks ago that he wants them to use that money, since he can't really control the interest rate, to go buy mortgages on the secondary market, which will free up liquidity for other mortgage lenders around the country to be more aggressive with their lending practices and lending in general, and dropping rates organically that way with more dollars to use for it. $200 billion is a lot to go through. And it's not going to happen overnight. That can take 6 to 18 months to probably actually get utilized. But they have it sitting on their balance sheets, and he's made the statement that he wants them to use that money, since Jerome Powell won't do what he wants and drop the interest rates, which still, that won't necessarily solve the problem either, because you still have this market, which I think this will have better effects than dropping the Fed interest rate, because you still have the consumer market that dictates mortgage rates, making things slightly more affordable, I believe. And when you have, it seems like the fuel prices help. It's a big expense for most people.
Sure.
And if all of a sudden interest rate, if they've been shopping for a home and they've been wanting a home and they barely qualify, this will help probably 5%, 10% more people qualify at least, in my opinion, which the only thing that I feel has been really propping up the housing market over the last few years is that a lot of people have equity. Yeah. They don't have this desperation to sell. The people that do have homes, and you've had a small amount of inventory.
Yeah.
Hey, quick commercial break here. Thank you so much for listening to this podcast. I really do appreciate it. If you want to give back, let me help you buy a house, or I can help you sell a house. It's the only way I make money when I'm not investing in real estate. I don't make money on this podcast or the events I do, but I do make money only when I help people buy and sell houses. So if you're looking for your next investment and you're here in North Idaho, I want to help you personally. If you are not in North Idaho, I can still help you out. I have a vast network of referral partners all across the country, and I can find the right real estate investor savvy agent for you so you don't have to. It doesn't cost you a thing. Thank you for your support. Back to the show. Now, if like Blackstone is no longer now this isn't set in stone yet,
right?
But if BlackRock, sorry, not Black. I say Blackstone.
I was like, well, I don't know what you're talking about, but yeah, BlackRock,
the big hedge fund, and they're and making institutional investing, the institutional investors, making it illegal for them to purchase.
I did see that. Yes,
single family homes. All of a sudden, you wouldn't necessarily have a dump of properties because I don't think they're going to be required to sell what they have.
Right.
But if they can no longer be a competitor, that may have a little bit more inventory.
Sure.
For people to go after. And I don't know if that's going to...
Do you see a lot of that in this area? Like, I heard about that in the news too. Like, obviously, like these big corporations can't buy these single family homes as like not investments, much. Right? That's what this was about.
No, it's a small amount.
Yeah, it's small, amount, right?
But it could have got out of control.
Sure.
It was in some markets.
Sure.
And we did have big corporations coming in to try to flip homes. Like iBuyers and stuff, and
sure.
Backed up by hedge funds that came in and wanted to flip homes, and they were overpaying for properties and also causing the prices to go up.
Yeah,
and right now we're not talking about prices going up. We're talking about, are there going to be more sales, more activity this year? So I kind of feel like if you have less competition from corporations, if Americans in general have a little bit they're given a break a little bit on their taxes, which it seems like that everybody's taxes are going to do better this year for the most part. And you had the combination of cheaper energy, a little bit cheaper. People's balance sheets are going to look better to qualify for homes. And if all of a sudden, guidelines for giving out mortgages becomes more competitive and loose because they have to buy up all these secondary mortgages,
right,
and freeing up liquidity, it just seems like you're touching all these little buttons that should improve things.
Right.
Now, I agree with you; it's still very unaffordable, but I feel like based off all those things, that's the right direction, not the wrong direction to create more sales.
And I agree with you there. But we are talking bold predictions here. And you specifically said these can take anywhere between 6 to 18 months.
Yep.
I do not see them being implemented directly right away. And we're talking about 2026 right away.
But he can direct the Freddie and Fannie right away.
Also, like, I'm going to go out on a limb here and say Trump has most, from what I've seen, businesses he wants businesses to succeed, not the people.
Okay.
Do you know what I mean?
That's what you believe.
I'm not saying like a bad, right or wrong thing. I'm just saying like he's typically pro corporation.
Yeah.
Like he wants to see,
and he believes because that will trickle down and help everybody. Yeah. That's what he believes.
And maybe it will, and hopefully it does, right? But obviously, like I want to see the end result affect the end buyer.
Yep.
And if it does this year, great. I could be wrong. These are again predictions. Sue us if we're wrong. I don't see a lot of things changing in the immediate future.
Got it.
But again, like it's all subject to change, right? This could all just go into effect tomorrow, and I could be completely wrong.
Well, yeah, who knows? Yeah, we're just making predictions,
right?
Here.
Exactly. Yeah. Would I be mad if the housing became more affordable? Absolutely not. I think any way we can make that work is a win.
Yeah.
And like you said, like touching all these buttons, I think it is going to have an effect. I just don't think it's going to be as immediate as this year taking effect.
Right. Yeah. So if I had to guess, I would say that we're going to have about 6 to 8% growth in sales.
Okay.
This year.
I love it.
Something like that.
That helps out both of our businesses. So
yeah,
like if that happens, I'm for it for sure.
Yeah. Nothing radical like double digits.
Okay.
And I think better than last year.
Okay. Cool.
Yeah.
And we talking better than last year as in more sales or better
more
price or like
I don't know about pricing.
Yeah.
That's hard to predict. We are going to make a prediction on pricing next. Okay. So I'm just going to have to, as you talk first, think about what you have to say.
Okay.
But let's talk about pricing next.
Okay.
So we both predicted Jeremy thinks the market in 2026 will experience about 5% less sales than the year before.
Are we talking North Idaho or national?
This region.
Yeah.
North Idaho.
Yeah, 3 to 5%. I'm fine with that.
Yeah. And then I'm predicting it's going to go up 6 to 8%.
Okay. I just don't see how people's incomes, because you're talking about all these savings and stuff, but also like your dollar is still stretching less because of inflation.
Yep.
Like inflation's very high right now. I don't think people are going to feel this difference right away.
No.
So, and that's
not most.
Yeah.
But I think 6 to 8%.
Sure.
I think there's going to be a good amount of people that will now qualify, which will push things in the right direction.
Okay, cool. I love it.
Yeah. Okay, so let's talk about housing. The prices, the median price point. First off, I want to make a huge apology to everyone that I've talked to about median household pricing for the last decade or more. I have been saying it wrong. I will admit I was very wrong. Here's why.
I think you had good intentions on being right.
About 12 years ago or so, I was in a class and the median household price was explained to me by the teacher. It's, take off the top 10%, lower 10%, average out those. That's where you get your median. It's not correct. Mm-hmm. And I've been spitting that falsehood out for over a decade to everybody without looking it up myself. We talked about it on the last podcast and I misinterpreted what that means.
Yeah.
It is not an average of the 80% in the middle. It is the middle. It's the middle.
You take a sandwich, basically your prices of your $10 million and your $100,000, you squish them all together, and the 1 to 2 in the middle, because there's either 1 if it's an odd number, or 2 if it's even, and you divide those two.
Yeah, if it's an even number of sales, they take the 2 in the middle and average those out. Yep. So when we said on the last podcast, $549,000 was the median price point.
Yeah,
it actually typically is better than using the average still. Right. What I was referring to was trimming, and that's not really used in housing. When it comes to trimming, you're trimming out the extremes and then averaging the middle.
What do you use it in? What is trimming used in?
I don't know. We'll have to look that up and apologize on another podcast. But it's typically not used in housing stacks according to the AI tools that I use to really figure this out.
See, and like I've been coming to your meetups a lot, obviously, and like I remember you talking about what the median was, but I thought I could have sworn that's what you were talking about. The median was you just basically sandwich it down and there's your median because it.
Yeah, but what I meant was, back then, my understanding was that you take off the top 10% extreme sales, the lower 10% extreme sales, and then the 80% that's left, you average those out to get a more accurate number, which you actually do. You get a more accurate average when you take away the extremes. But that's just simply not what the median home sale is when it comes to real estate stats. That's just simply, so if you had 3 sales last month, and one was $100,000, the other was $125,000, and the other sale was $1 million.
Sure.
The medium home sale is $125,000. It's the number in the middle.
Right.
It's just simply that middle sale.
Yeah.
If you were to order them out and then pick the one in the middle, or if there were 4 sales, you take the 2 in the middle because it's an even number, and you average those 2 out to get the middle. What's in the middle?
Those are the 2.
If you laid them all out. So, what do we think the medium? What do we think that middle price point is going to be next year?
So the median middle was it like $549?
$549. Yep, $549, and it went up by 4.2% from last year.
I think $560.
$560. Okay, so a little bit up slightly. Okay.
And again, like that might counteract what I said earlier on how the housing market's going to go down. I think people still think their thing is worth more than it is.
Yeah.
Obviously, market supply and demand dictates what these things are worth, but like, is a 3-2 in Rathdrum worth of $500,000? Does it feel worth it to me? No,
not yet.
But also, like, I bought it at $300K, so like anything that like I in the neighborhood where I buy that's 40% more than I purchased doesn't feel worth it.
Yeah. Now, would you sell your house for less than $500,000?
Yeah, I'd sell for less than $500,000. It'd probably like $480.
Yeah, but it's worth more than that.
I don't know about that.
It sure is. You have 2,000 square feet, don't you?
Yeah, like 1,700.
Over 2,000?
1,700.
Yeah. Yeah, I think you're going to have to look at comps again.
Yeah.
Pretty sure you're you know what? We can do that right now.
Let's not do it right now.
Well, so you're guessing 560 for the medium.
580.
80 now.
No, it wasn't. You said 540, 560. Yeah. 10,000 more than what it was. I thought it was
10,000 more. You think it's going to go up by 10 grand?
Yeah.
Okay.
And again, like I just think like we're kind of at a peak for what I think the thing is worth for people. People will pay for it.
Yeah.
Again, like we don't live in a fancy house. We live in a cul-de-sac in Rathdrum, population of about 2,000 people in Rathdrum, not a big city. I just don't think it's gonna continue to go exponentially higher. Nick, get a calculator. Good Lord.
Oh my God. Sorry. That's not right. Okay. I'm guessing that it's going to go up about 6%.
Okay. So 549. Times 0.06,
yeah.
32,
So
581.
Okay. Yeah, that's probably a good prediction. That's going to be my prediction. So yeah, by this time next year, we're going to see stats showing that the medium household price went up to 581. I think
what do you think supports that?
A growth of sales and less affordable housing, and more higher end sales. There's going to be more properties that sell in the 600s plus than properties that sell below 550, and it's gonna bring it up a little bit.
Okay.
Is my guess.
Cool. Okay. Yeah, like I said, like I just don't see like wage increases or inflation battling like negating people paying that for a normal house.
Yeah. So here's an interesting thing. Just a couple years ago, we sold a house in a retirement community in Rathdrum, a new construction place, and it was, I think, $475,000.
Okay.
$475,000 a couple years ago. Now, keep in mind, we have not really had much appreciation in the last couple of years.
Yeah, we had our huge run up.
It's been so low that when we do CMAs and appraisals and stuff, you don't really see much being used for appreciation or anything. You can like go back almost 12 months for the most part, but we sold this house a couple of years ago. It was new construction. Now it's all built out. It's in Rathdrum. It's a 55 plus community, gated community. Guess how much that house should definitely sell for today? This was just 2024, by the way.
Gated community, you sold it for 450?
75. Little house in a new construction neighborhood in Rathdrum on the prairie. Keep in mind, we in general have not had much appreciation at all. Now we have solid comps. This isn't Radiant Lake. No. This is on the other side of the highway in a community that's barely known. But we have so many solid comps to support this price. It's ridiculous.
Okay.
Guess.
620.
Yes. Wow. 630. Okay. I'm just going to say yes because that was so close.
Yeah.
Isn't that insane?
It's pretty nuts. And we haven't even had, like you said, the big appreciation in the last couple of years.
So our market in general is so inconsistent depending on the neighborhood, the price point, the type of property. Now, I also just went yesterday to a house that was sold in Kellogg for $285,000.
Okay.
This guy put 20 grand worth of improvements into the property. He bought it also in February of 2024, 2 years ago.
Okay.
He's been trying to sell it off market. He's had a couple offers. He's desperate to sell. He'll sell it for, guess how much? And this house, he put 20 grand into it. 83 is what he's willing to take.
So yeah, he's basically trying to break even. Not even break even. He'll take an L.
Yeah, he's willing to take a $22,000 loss.
Yeah, wow.
Yeah. Now it's not on the market yet. I feel like he can get more if we put it on the MLS, but like that's.
But then you got to wait and you got to find a buyer, and
just in that, it's just a house out in Kellogg.
But then if he also puts it on the MLS, he's got to start paying realtor fees.
Sure.
And like there goes 6 to 8% based off taxes, and
yeah, he'll probably barely get his money back. Maybe not his full investment, but like what he paid for the house.
Was this a wholesaler that bought it or a flipper? No.
This is just an older couple that purchased, and they actually I thought they kind of got a good deal in general. They bought a good looking house in general. They've put 20 grand into it with foundation work. And
why do they want to sell?
They want to move to Phoenix.
Okay.
They have health issues and they don't want to deal with the stairs anymore.
That makes sense.
But they've been trying to sell it for sell by owner for over a month, and they've had a couple lowball offers and just not really given very far. But
what have their lowball offers been?
Less than what they're trying to sell it for, and seller financing offers. Like people just want to finance it from them. But I found that interesting that you can buy one house 2 years ago in this part of town, and it goes up 150 grand in 2 years, or buy this house over here, which is like a little cheaper, and the value doesn't move. Which I'm seeing a lot.
Sure.
I'm seeing in general, like people that purchased around the 400s for like a kind of a newer construction property.
Yeah.
In Kootenai County, those properties have actually appreciated over the last couple of years in general. Yeah. In general, depending on the neighborhood and all that stuff. Right. But it's weird. Everything's supply and demand. I guess more older people want these gated communities.
Yeah. Makes sense.
Which isn't, and they're willing to pay a pretty penny for it.
Yeah, interesting. And obviously, like you said, this is all such market dependent material. Like obviously, Kellogg, you don't really see a lot of appreciation over the mountain like that.
You did. So Shoshone County over the last 5 years appreciated more than any other county in North Idaho.
Okay.
So Shoshone County by percentage appreciated the most.
Crazy.
But they had a spike and now they're kind of in a stalling.
Yeah.
So it's interesting to see that just within our own backyard, we're seeing the markets move totally different. So depending on your perspective as a home buyer or home seller,
right,
you can think that the market's great or it sucks. Everything's so hyper local.
it is.
It's just odd.
Yeah.
But in general today, we're talking about the whole region of North Idaho.
Sure.
How are we going to do it when you average everything out?
Yeah, when everything gets lumped into a pot and put together.
Yeah.
Cool. Are you going to end up listing that property for them out in Kellogg?
Oh, most likely.
Cool.
Yeah, I got to send them some info today.
Let me know if you need a photographer.
Oh, will do for sure. Oh yeah, you need but today?
Today?
Availability today
To go out to Kellogg?
if needed.
And get you Sunday.
Okay, cool.
We'll talk.
We'll talk later.
I'm not going that direction today. I'm going up
Okay.
north. I'm going to Sandpoint, Priest River today. So
Had to ask.
Yeah.
It was a last minute appointment yesterday.
Okay.
Yeah.
I can get you in like Sunday for sure if you need it.
Okay.
Yeah.
They haven't agreed yet.
Okay.
To our terms, but I did tell them we'll have to get going pretty quick because they have another house under contract that they have to close on in like 2 weeks or get an extension, and they can probably get an extension if their home is on the market.
Sure.
Yeah.
Cool.
Okay. Mortgage rates. Hot topic here. What do you think they're going to do this year? Mortgage rates. Right now, they're hovering in the low 6s.
Prediction. It doesn't matter. And I don't see them going anywhere, to be honest with you.
Okay.
I see them being pretty
and why
stagnant.
Is that?
Like you're talking about, like Trump is trying to force these people to make it. Fannie Mae and Freddie Mac trying to force them so they have to spend their money or whatever, right?
Well, he has the power to dictate what
He
they do because
he has the power to dictate
because they became part of the government in 2008.
I just don't see anything that like warrants change.
Okay.
Does that make sense?
No.
Okay. Well,
not to me, but I would like you to explain.
Yeah. I don't. There's no. Supply and demand just feels stagnant right now, right? Like it just feels like it's not moving a lot. There needs to be huge changes. And why would they change? Why would insurance companies and mortgage companies take a pay cut?
Well, for originating new loans.
Yeah.
To be competitive if they have the liquidity there.
Sure.
So they wouldn't be taking a pay cut necessarily. It's just if the market, like they work off margins.
Right.
And if they can borrow at lower rates and then resell.
Sure.
That's how I think it actually works. It's not like they're not going to be like, okay, you're currently having this rate, we're going to drop it for you.
No, they don't.
It's
do that.
New business,
right? New
business, and if they can borrow at lower rates, if the Fed drops,
they can also make a higher margin. I don't know.
Yeah.
I don't see it going. Like, what would happen if it went down to 5 or 4? Like, it feels like 6 to 7 the last like 3 or 4 years.
If it went down to 4, that'd be crazy.
Okay, yeah, that feels very nuts.
Yeah.
So like you're talking about like, again, like what I've seen in the last couple of years has been like 7 6s, 7 6s, 7 6s, and it just kind of hovers right there. I don't see anything that's going to make it do a hard swing.
Yeah. Well, every time the interest rates trickle down a quarter point, more people qualify for home loans.
Sure. Okay.
But you don't predict a change. You think by this time next year, it's still going to be about 6%.
Yeah.
Okay.
I could be wrong.
Yeah.
I just don't.
I don't
see
think
like
you're far off.
Yeah, I just don't see like I don't see a huge swing that like. And you're talking about every time it dips like 0.25%, more people qualify and everything like that. I don't know. I've just seen it. Market trends lately have been 6s, 7s.
Huh?
Jesus,
you're hanging around teenagers too much.
6, 7. Okay.
Yeah.
I just think they're going to stay that course.
Yeah. So yeah, I think they're going to drop, but not by a whole lot.
How much do you think they're going to drop?
Probably by maybe 3/4 of a point. I think that they're going to get around the mid 5s.
Okay.
Right now they're around 6, 6.25. I think you're going to see around 5.25, 5. This is my prediction by the end of the year. So this time next year, around 5.25, 5.5. But I do see them going down, and the reason is because Trump has made it very clear that's what he wants, and he's replacing the Fed chair in May, and the Fed chair is going to do what he wants, at least initially.
Yeah.
Because he gets to appoint that person. And that person, even though they don't have direct control over mortgage rates,
right,
they absolutely have an influence.
Yeah.
And that can take time, but I feel like you're going to see big changes in the summer. Most of the rate cuts will probably be towards the end of the summer, but they're going to go down small because the consumer market's going to catch up to that later.
I would say,
but I don't think it. Sorry to interrupt, but I just don't think that it's going to be so significant that we're going to be all of a sudden everything's going to cash flow.
Yeah. You're right.
But I think that it will be more home buyers will qualify for loans that barely qualify now.
Sure.
That maybe qualify a little bit more.
Yeah. Cool.
Because half a percentage makes a huge difference.
Absolutely. And to kind of piggytail or piggyback. Yeah, that's what I'm thinking of. Putting two words together. Piggyback off of your thing. Like you say, it's going to go down in the summer. If it does go down, I think it's going to be later in the year than you think. Summertime's like spring, summer, fall is when people are really active in the market. And I think competition's just going to be happening right then anyway, no matter what. And I think in order to make competition a little bit better, it may get reduced a little bit towards the end of the year, just to kind of like finish out the year strong and see how many more people we can get to qualify. The summertime, it's almost like the Wild West, it feels like sometimes.
Sure. Yeah. But I think you're just going to have all the ingredients of everybody's incentivized to sell more.
Sure.
I think there's going to be a lot more liquidity by then. You're going to have the actual Fed being now persuaded this time because they have a new guy on the head chair to cut rates. I just feel like you'll have all the ingredients for it to slowly become more affordable, but not rapidly.
And yes, and that's.
I mean, I'm only talking about at the most 1% drop in rates by the end of the year.
But that does feel pretty
However,
big.
Here's what I'm also kind of going to piggyback on my own thing about that. I think you'll get a lot more sellers that are smarter to the idea of partnering with lenders and marketing to buy down the rate further.
Sure.
And I believe you'll see a lot of marketed rates in the high fours, maybe mid fours, and people just kind of copying what has been working with big home builders like Lennar and D.R. Horton, where they're advertising these low interest rates because they'll just simply take some of their equity and buy the rate down.
Yeah, it's interesting.
So I think you'll see a lot more marketed rates in the high fours, but the actual rates are in the mid fives.
Sure. Okay. What do you think that's so like, without getting too deep of a dive, how much difference is a 0.5% in getting qualified? Like how much difference is that in a mortgage home payment?
Let me look that up. So what is the average?
Not the median price.
What is the average discount in a mortgage if the rate drops 1% on a, let's call it a $500,000
mortgage calculator.
Let's say a $450,000 loan, which is average.
Sure.
I mode here.
I just want to see like what difference that looks like for somebody to.
Yeah. So that's a monthly savings of approximately almost $300 a month.
Okay.
So you take that and you combine it with the fuel savings and also the potential of people buying down the rate further.
Sure.
I think people's balance sheets will make it more possible for people to go out and purchase that have been wanting to purchase for the last 3 years.
Okay.
Where all of a sudden, hey, this is the year we can actually pull this off.
Sure.
I feel like that could be 10% of the population that have been wanting to purchase.
That feels extreme,
easily,
but that's okay.
No, I'm saying of the people that have been wanting to purchase.
Yeah. I think
that could be 1 in 10 is all I'm saying.
I hear you, and I love you. Neither of us are right or wrong here.
Yeah.
We're hypothesizing.
Right.
I think people have a problem saving money. I think people have a hard time saving their down payment.
Oh,
and
sure.
that goes back to, inflation. It goes back to people having spending habits. Like, I think that is inherently a problem in itself.
Yeah.
To stop people enough from actually making a big difference in the market.
You make a super valid point.
Okay. And that's my disconnect.
But how have people been purchasing homes the last 3 years?
The people that want to purchase homes have been the people purchasing homes.
Yeah. Do you think they've ran out?
No, I don't think they've ran out. I just think you're not going to find new people getting in the market like, oh, I can magically buy a house because the rates went down 0.5%. Like, no, people are going to save and people are going to find a way and people are going to do that thing or they're not.
I'm just saying it's not just the rates.
Right. And you're right. Yes.
I think there's going to be more liquidity, more incentives, also a combination of rates being lowered a little bit.
Sure.
And people having a little bit of a break with fuel costs.
Sure.
Which is most people don't drive Teslas and Priuses like we do. And it's a much larger percentage of their expenses than I think we give credit towards. Well, if that large expense goes down by 40%,
right.
People naturally aren't good at saving their money, so they'll want to spend that extra money, which potentially will be on a mortage this time instead of rent. I also believe rents are going to go up.
I agree with that too. I don't see a reason why.
Which will push out renters that, okay, now we got to buy. Because I think also a huge thing that's been keeping the market, a lot of people not wanting to purchase homes, rents have been more affordable because you had this wave of inventory.
Right.
And that wave is going to be drying up.
Okay.
Affordable new construction apartments for rent, where there's all these incentives to get people to move into that temporarily.
Sure.
I feel like that's been drying up because there are a lot of permits that kind of stopped 3 years ago, where there's not going to be a proper amount of supply for renters this coming year and next year.
Makes sense.
That also kind of goes into my thinking.
Yeah. And you're talking about like combining these fuel savings and the interest rate savings and like having this whole thing kind of all the pieces line up to where things are more affordable. I agree with that. I just think like fuel prices, it's all something that is subject, right? Like these could go back up tomorrow. And I know like Trump is trying to put tariffs on all these other fuel companies. So maybe the price of fuel is going to go up a lot when we have a supply problem. I don't know.
But most of our fuel is coming from the U.S. now.
Yeah.
So there's no tariffs on that.
Sure. I guess you're right there. But I saw something the other day of how they're trying to saying no oil from certain places until they play ball.
Sure.
And it's like, okay, well then, we have
plenty
supply.
here.
Yeah, but like American made things are typically more expensive.
Until the tariffs.
Until that happens.
Then we become the more economical option.
Yeah. Okay. So, I mean, I think with rates, I don't see a huge change. You see a little change in a good way for home buyers, which I'm all for again, of course.
I think that's all it takes is a little bit of change, but not, again, I'm not predicting huge increases here. Still single digits.
Sure.
As far as growth.
Yeah.
But I do see it making an impact where this is going to be a better year for most people.
Sure. Do you remember when like interest rates were in the 2s and 3s a couple years or like 5 years ago? What caused that?
What caused that? Well, what caused it was a lot of things. We had a huge dark depression scare that never actually happened, and rates dropped like crazy to influence purchases through COVID. But then they made the mistake of just leaving them there. So the lower interest rates, they should have stopped that a decade ago. They were left over from the previous recession, but never hiked. They didn't need to be as low as they were in 2014, 2015, 2016, because we had a healthy inventory back then. And we didn't need that huge button, but like somebody just left the gas on at the Feds and had interest rates. The Fed rates were at like 1% or something stupid. And then when then COVID happened, it went to 0. And so people were borrowing for free or, it was just.
Which was that bad? Like,
yes.
Was it?
Yes. It caused massive inflation. It caused massive appreciation, double digits for years.
Yeah. But
we had double digit home appreciation for like 4 years straight, which was not healthy.
But it allowed a lot of people to get into the house.
Also corporations.
Right. That's true.
Also investors.
I mean, I'm also guilty.
But the supply wasn't there for that.
Right.
The government, they fixed the problem back in 2012. They fixed it with the low rates.
Sure.
It really helped. We went through this huge cycle, and then what happened was they just never raised the rates.
Got it.
They were supposed to raise them over a decade ago, and then they didn't do it until 2022. It's mind-boggling because we didn't have to have that huge run-up.
Sure.
It was manufactured.
Sure.
And we should have saw the writing on the wall because they did. I remember in 2013, this prediction of we're going to have super low inventory in 2017, 2018, because all these builders went away. We're not building as much as we should. And we're having these sales keep getting better and better, but we're going to run out of houses here in just a few years. The Fed should have recognized that and made it more expensive to buy real estate on a payment wise, and that would have slowed down prices going up.
Sure.
Does that make sense?
Yeah.
This is an ongoing issue. The housing has had issues forever.
Yeah. I don't think there's a perfect
There's always a new issue. But that's been a long time coming.
Okay.
This inventory issue.
Sure.
And then we experienced it in COVID. All of a sudden, there were no homes left, and rates were still insanely cheap, which just made prices go up because all of a sudden everybody wanted it,
right?
Because it was a cheaper alternative than renting.
Yeah.
Which there should have been more balance.
Sure,
is all I'm saying.
Okay.
And I think a lot of experts agree with that, but everybody was getting fat and happy.
Yeah.
A lot of people were benefiting off of it, but knowing that this wasn't going to have good consequences for our children in the future.
Right.
But people are greedy.
And we're guilty of it.
Sure. Well, but we weren't dictating policy.
Yeah. We had nothing to do with it. We
just got to benefit from it.
Yeah. Took advantage of circumstances.
I mean, BlackRock was doing it.
Mm-hmm.
Everybody who like was good at math. All the engineers retired and became real estate investors because they're good at math and they know this is an opportunity.
Yeah. Oh, great. I can see the writing on the wall here. Cool.
Yeah. Now it's a tougher opportunity.
It is a tougher opportunity.
It's still a great opportunity to put your cash, but with leverage, it's becoming less of a desirable asset.
Sure.
Because the leverage is now expensive.
Right. Which makes it hard to cash flow on these things. And it makes it hard to make it like a business decision based off. You can't buy a house at market price and then rent it out and make rents.
You can't. Well, yeah, with 20% down, no, you got to almost buy all cash or like mostly cash to cash flow. Which, if you're sitting on a bunch of cash, I think real estate's a great investment.
Sure. Yeah.
If you're not sitting on much cash, real estate's hard right now. It's hard to make sense of it. And that's the big difference from a few years ago. A few years ago, you didn't really need the cash. You just needed to figure out how to buy.
Right. That's true.
And the properties, made enough income to pay for your negligence in your not having money.
Yeah.
These days, it kind of requires some money to do well long term.
Yeah.
Okay. Last topic. What do you think, if you had to guess, what do you think AI is going to do to the real estate market, if anything, this full next 12 months?
What do I think it's going to, I don't know what it's going to do actually to the market by itself. I do know it's just going to keep getting better and better.
Yeah.
And I think like we're at like a very small cusp right now in the AI revolution of like, we have yet to see the full potential of what this thing can do.
Yeah.
It's made tools easier, obviously. Like we use AI every day in our businesses.
Yeah.
And I think that's going to cut some costs on certain things.
Yep.
I don't know what it's actually going to do to the housing market until we start seeing these like Tesla bots start building houses.
Yeah.
Until we see like,
well, what about like for the real estate marketing that you're seeing, or if jobs are going to get replaced?
Mm-hmm.
You have any thoughts about any of that stuff?
Yeah. So real estate marketing, there's a couple real estate photographers in our area who use heavily AI videoed.
Yeah.
And it drives me nuts.
Yep.
Like I don't like it.
Yeah.
Like I'm like, you're not even showing the house anymore. You're just showing like a big, beautiful potential on a piece of land. Like it's not a thing.
Yeah.
It's a concept.
Yeah.
It looks cool and it's flashy, but it doesn't actually like sell your house.
Yeah.
What was the other one? You said marketing, and what was the other one?
Any jobs that might be taken over in the industry?
I think the jobs that would be taken over would be people like title companies.
Wow. Okay.
Like I think it has the tools and the know-how.
Like the researchers and people.
Yeah, researchers and people like the AI can send out contracts for you and make sure it's signed and make sure it's verified, and like they can take over almost any office admin.
Yeah.
Which is crazy.
Yeah.
Like you could replace your admin with an AI. In a couple years, you can train that thing.
Maybe in the future.
Yeah. To do a job.
Yep.
To upload photos. You send it a thing. Hey, I want this here. And it'll just do it.
Yeah.
It'll handle email calls. It'll handle like email. You can have your AI talk to you right now and it sounds conversational.
Yeah, it does.
You know what I mean? Like we're at that point almost where you can start replacing admin with things you train on an AI.
RD, and he loves it. He's got an AI that answers his phones and schedules appointments for him. Mm-hmm. And it works really well for his business.
Yeah.
Yeah. It's pretty incredible.
He does that? I should talk to him about that. Yeah. That sounds really good.
Yeah. Maybe you can implement it in your business.
Most times I'm just like too busy to answer a phone. Yeah. And like having somebody available to tell people my schedule would be like highly beneficial, I think.
Yeah. But did you know on Google, I don't know if just because I pay for if it's available to everybody, instead of using Calendly, I can use Google booking feature, and it's way easier.
Okay.
And it's so easy to set up. Like here's a link to just book me.
Cool.
During these times, and it'll, like if I already have anything booked, it automatically like says that's not available.
Oh, cool.
It's really cool.
Okay.
And you can set up parameters of like how long each appointment can be and all that stuff.
I can do that on my website too, which is nice. So if people go to my actual booking website, it'll tell you like, oh, you can't fit it in here because you're getting too many things. It says like, hey, your photo session is going to be 45 minutes. If you get drones, hour 15. If you get a video, it's an hour 40. It just kind of like applies it in. So if you book everything, it won't give you the time slot if it's not available.
Right.
I just think like it's going to get better and better and more efficient on that for sure.
Yeah.
As far as like cutting down and taking jobs, I still think people want a human element in their real estate businesses.
For the most part.
Yeah. Like you guys are very much person to person. People don't want to be talking to bots.
Yeah.
But maybe they don't know the difference too. Like, hey, this isn't.
It could get to that point where they don't know.
Right. Yeah. It's pretty good. Other than when it's like, right. Sorry, Nick.
Yeah.
I didn't know you meant that.
Processing. No, it doesn't say that.
Got it. Yeah. Thanks.
So, okay. So if you had to guess, AI is going to make not much of a big impact. Is basically what
I think it has
but
potential.
It has potential.
Yeah, and again, like we're just finally
so by
seeing
this time next year, any significant events do you think might happen with this tech?
I don't know about significant. I just think it's going to keep getting better and better, and we're going to slowly see it just like be a revolution.
Yeah.
Like you could train an AI you could train an AI on their option trading right now. Hey, I want to do this. I want to do this. Execute when you see this. You can
and it will go into your account and do moves for you.
I'm not sure if it will, but it can at least tell you when a thing's happening. Like, oh, by the way, this is
inform you to prompt you to do things. Yeah.
Hey, got everything ready for you. Just need to push the button type of thing.
Yeah.
What do you think?
I kind of actually, as much as I'm like so optimistic about AI, I feel like this year might be the year where people get AI fatigue, and
there's a lot of it.
That everything they're seeing online, anything that is AI, like AI videos, AI text, I think people are going to start to catch on.
Yeah.
What AI text looks like with all the emojis and the double dashes and stuff. And they're like, and I have a feeling by the end of 2026, people are just going to be barely paying attention to anything that's AI generated.
People barely pay attention as it is.
Right. Sure. But I mean, more so they're going to be trained in their mind. If I had to guess,
sure,
I think people are going to be they're going to easily more point out, oh, that's an AI thing. Or they've been tricked so much where they just stop looking at stuff.
They stop caring.
And they think all videos are fake, even if they're real.
It's
they
true.
think all texts that you send are fake, even if it's real, or not text, but like emails and stuff. They think all the posts might just be. I have this weird feeling that we're going to go through this where the robotics aren't there yet, but they're working on them.
Yeah.
And they make a good, year of interesting stuff that in factories, but not available to the public.
Right.
I put a deposit down for one of those Neo robots that's supposed to be delivered this year. I have a feeling there'll be a delay on that and I won't actually get it. And I feel like this will be the year where people really get sick of seeing AI stuff. But then I think maybe the following year or something, you might start seeing robotics and real big use cases for AI.
Yeah.
But if I had to guess, we'll see if I'm wrong, but I think this will be the year where people just block it out of their view and they just think everything's fake. And they're just annoyed of anybody that posts stuff that's AI generated.
Yeah. I can have AI edit my photos now, by the way.
Yeah.
I haven't done it yet. I still like having a team that I use to do it because they get back faster than AI would.
Yeah.
Like it's 12-hour turnaround for the people. It's 24-hour turnaround for the AI. And I'm like, until that gets to the point where it's net even, I'm not even going to try it.
Right.
Like I've got a system that works and I get everything out fast and prompt in the morning. I don't want to get something back from AI and be like, well, that's completely not what I asked for and have to have time mucking around with it. Like, but it's getting to that point where it will.
And we were in a house a week ago together and I showed you how cool it was that like I could just take some photos and then ask it to put staging furniture. It actually looked really cool. But then I tried it again later. Didn't work that well. And then I was fumbling around with it for like a half hour trying to get, and then it was just showing me a different house completely. Or moving the kitchen. And it gets to the point where you're just like, what the hell am I doing? Trying to fight with this machine.
You have to try again. Hey, take that first image I got you. We're going to re-upload this first image. This is the one I want you to work with.
It doesn't matter. You'll say that and it'll just get to a point where it just starts fucking with you. And it's like, nah.
Yeah. You're wasting my time. But it is cool what it can do, and that potential is like it's locked behind a door right now. It's not really locked. It's still trying to figure itself out, I think.
Yeah. It still hasn't broken through the common sense door yet.
It feels like
once it gets through common sense, because it does amazing things.
Yeah.
But it just doesn't have that yet, like total like, hey, I just asked you to do this and you completely did the opposite, which is so common.
Yeah.
This is mostly when it comes to image editing, I guess.
Yeah.
Not necessarily when you're asking for text. It doesn't really screw that up too much, the large language model, but...
Yeah, when you're asking for image editing and image modifying, it feels like a toddler.
Yeah. It's like, it like wants to be... it will give you something amazing at first, like, oh, that's cool. Can you do this? And they'll slowly get worse and worse.
Your first image is usually like, oh, that's spot on. Can you make me one more like it? I'm like, that's not exactly what I want. Can you redo it? And then it just keeps getting going down the shit.
Yeah. But if I had to guess, like, again, I feel like people are going to get... I feel like this might be the year where people go on social media less and less.
Yeah. Because there's less of a reason to connect.
Yeah, because almost everything they're seeing is AI generated, and it might just get annoying, and it might just be this instinct. I just don't want to look at that.
I did a social media class the other day, and I said, like, when you go on social media and you're posting, people want one of two things. They either want to connect with you, or they want to disconnect from reality entirely.
Yeah.
Right. So like there's like you're an authentic human.
Yep.
Creating authentic content, genuine, you're just a personable person, or you're just completely disassociating and making weird shit.
Yeah.
Like people like both of those.
There's a couple of guys, real estate agents, that put out AI videos of them doing crazy stuff.
Yeah.
And the first one or two I saw, I was like, that's kind of cool.
Yeah.
And then but then you just don't want to see it ever again.
Right.
And I don't know if that's just me.
Yeah.
But like you see like, oh, they're about like there's one of their videos. Don't want to look at that because that's not human created.
Yeah.
There's no effort that went into that.
Yeah. They told them.
But I don't know if other people think that way. I have a feeling maybe.
I think that way with a lot of real estate headshots that I see, because I see a lot of these AI generated images, specifically around Christmas when you saw like
it's always
everyone
cool at
in a
first.
dress.
Yeah, and everyone with the candy cane.
Yeah, I'm like, do I need to do that too?
Yeah, and then you'd see some guys do it too, just because to get on the bandwagon.
Yeah.
But then after you see it so many times, you're just like, this is annoying, and you just scroll right through it because it's like, this isn't real.
It's not even like
it's not real.
You're doing what everyone else is doing. Exactly, and you become just another flick.
Yeah.
Which, I mean, if you can get on content, that's still better than not doing content in general.
Sure.
Like having a blip out on a radar is better than not having.
If you need to do content, if you have a reason for getting attention,
right? Which if you're a business, most people do.
Yeah.
Anyway, like I think like AI is going to do wonders for like content creation as it has been. We're going to continue to see that evolve. I just don't know if it's going to like replace the actual human element.
Yeah. And if I had to guess, one more bold prediction on the social media AI train, I think that you'll probably see higher and more engagement with the simple videos.
Yeah.
Of people that are just like talking to a camera
instead
of jumping out of a plane.
Right.
Well, there's explosions in the background. I feel like people are just going to get
Velociraptors.
There's going to be fatigue on that. Like is, and I don't know if it's just me again. I feel like you're kind of feeling the same way where people they're going to catch on to, oh, this is AI and I want nothing to do with this. I don't want to even see it because there's no human effort that went into that.
Right.
You know what I mean?
I agree with you 100%. And I think authenticity is going to be a huge thing. Like you said, people are going to get this AI fatigue. I feel that.
Yeah.
And people, like the studies I've shown, like the videos that do the best are the ones that I give a shit about the least.
Yeah. Oh, dude, the one that you edited of me in the house screaming like a psychopath, that one did really well.
As I told you it would.
But it was just a normal video, and then here and there it'd scream a little bit. But there was no AI editing.
No, we just
showcasing the house. But then I would just like go off on a tangent about there's trees in this. But I think people appreciated that it was just a simple video.
Yeah.
There was nothing crazy about it, except for me.
Right. One more prediction kind of I want to get into. I know we're running at about an hour here, but crypto. What do you think crypto is going to do this year? Crypto and stocks.
Man, you go first.
Okay.
I'm going to have to think about this.
All right. I think pending a worldwide, like, I think stocks are just going to be doing what they do, right? Unless businesses have tanks or you're doing option tradings or anything like that. I think it's going to generally trend upwards. You're going to have some dips, of course, but like overall market's going to do what it does, slow up. Crypto's I think it's going to go back up.
Yeah.
It was up last year. And it was it went back down. It didn't go down. It went down a little bit, but like I think we're going to see another surge of crypto, specifically like the Iran rial.
Yeah,
like the Iran's dollar just went to zero. It's $0
because of all the protests, or like what's going on in Iran? Like I know they're having some issues right now,
right? I just think like
zero.
The dollar is
I'm assuming it was a fiat currency.
Yeah,
backed by nothing.
Yeah, backed by nothing. Yeah, so it's like it's equivalent to €0 right now. So it's like it's net zero on the market.
Not worth anything.
Not worth anything. I think the dollar is going to be used less and less. Just the dollar in general, right? Like I think,
you think more people do you think like there'll be kiosks and stuff for this crypto, like people more of an option to purchase stuff with crypto?
Yeah, I just think crypto is going to be more and more integrated into what we do.
Yeah,
because it's a digital currency that has a finite number on it.
Do you think Amazon will have an option where you instead of just paying with a credit card, you can pay with your Bitcoin wallet or something?
Maybe. I didn't think about that.
Because if that happened, I would say, I think now there's going to be a better use case for
once these heavy hitters start taking things like that, like Walmart, you can use crypto at or whatever. Maybe.
Are there any big retailers that take crypto?
I don't know.
Tesla did for a little bit.
Yeah. There were a lot that took crypto. Speaking of the guy who sold like, was it 12 Bitcoins for 2 pizzas or something like that at the beginning of the Bitcoin era?
Yep.
Like you can make exchanges for it. That was not a good exchange.
Yeah.
But I think it is going to be more and more integrated, not just here, but internationally.
Okay. Yeah,
right? People are going to start using this as their...
Well, that's a good point. If Iran, if that goes to zero, what do they use?
Exactly. Like
they can pick up Bitcoin.
They can.
And use it around the world.
Yeah.
So you got a good point there. It might go up.
Yeah.
How much do you think? Right now, let's see. What's Bitcoin at? $8 or something like that?
4,000, 96,000, something like that. Just type BTC price.
Worth today. $95,000.
I was right there. I'm expecting a 20% increase.
Okay. So it actually go up to because it's been up in the 120s.
Yeah,
before.
it's going to go back up to where it was at least.
So you're going to guess what, 120, 130?
Yeah.
Okay.
And I'm talking Bitcoin in general, not all cryptos, not your Dogecoins, not your. I think Bitcoin is the industry standard of what crypto is.
Yeah.
Obviously, there's so many Ethereum, Solana, Dogecoin, whatever. But as far as utility, Bitcoin is going to be integrated into more and more solutions.
Okay, that makes sense.
I've thought about taking Bitcoin for Ginger Snap too.
That's a good idea. So a year ago, Bitcoin was at 104. In the summer, it surged to the 120s.
Yep.
In the late fall, it was in the 120s. It dropped to about 86 in November. It's starting to climb again. It's around 95. So you think by this time next year, it's new? It's because it actually went down from this time last year.
Yeah.
By about 8%.
Sure. Yeah, I think it goes back up in the 120s.
Oh, I'm sorry, not 8%, 5%.
Wow.
So you think it's going to have almost a 20% run up?
I think it's going to go back up.
Okay.
I think people are going to find a way to integrate it more and more into more and more things. And once it does that and it has actual value attached to it, people can trade it for different commodities.
Yeah. So this was a huge year, this last 12 months for silver and gold.
Yeah.
And as you have less liquidity, those typically go up.
Sure.
And I do feel like you're right. I think crypto is going to go up, but I think it's going to go up more.
Okay.
I think
how much do you think it's going to go up?
40%.
40% from the current price today. So like in the 140s.
I think you're going to see it spike as high as in the upper ones in the summertime, and probably go back down to around the 140s, 150s.
I should have bought more of it when I was buying it for like $8,000 a coin.
Yeah.
Coulda, woulda, shoulda.
That's going to be my guess for. And when we talk crypto, we're just talking Bitcoin.
Yeah.
The rest of the coins, who knows?
I mean, Ethereum's got a lot of like usages as well.
Yeah. I've got some Ethereum. I've got some Dogecoin.
Yeah.
Just for fun.
Ethereum feels like the silver to the Bitcoin gold. You know what I mean?
Silver is at like $90.
Do you want to buy some Bitcoin miners?
You know what? Once I get my solar all set up, it'd be nice to have out that cabin that's producing free energy.
Can I buy a Bitcoin miner and use it at your cabin and pay you rent?
Yeah, as long as it doesn't need ongoing maintenance. I've looked into this before. Apparently, if it got reset or something like that, someone would have to manually reset it. But if it's something that could be automated and used, we'll talk more about that.
What if I did it here?
Here at my house here, where the energy is being used? Because it's mostly you're trying to.
Yeah.
Oh, okay.
Yeah, I pay you power.
Yeah, let's talk about it. Sure, for sure. Are they loud?
No, it's just a computer on a video card.
Okay.
Just need a computer and a fan, probably.
Well, that sounds fun. Let's do it.
Okay.
All right, everybody. Thanks for listening. Let's hear your predictions since nobody comments.
We get some comments every now and then.
Here.
But what are you guys predicting for 2026? Specifically with the housing market, interest rates, anything we talked about,
crypto,
or anything,
and AI.
Anything we're not talking about, other predictions that you think will happen that we just you think will be interesting. We'd love to bring them up on one of the future shows.
Yeah. But I really got to pee, so we got to get going here. Thanks for listening again, and we'll see you next week.
We love you. Bye-bye.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.